All right, so I got invited to speak at a local title company the other day, and so the topic was how to thrive when the real estate market dives. And after the event, I went on a little. I've got this park. Which I'm getting attacked by my dog. I went to this park where I go to jog, walk. Used to jog a lot more. Nowadays, it's more walk as I get older. But anyways, the point is like when I go on these workouts and jogs and walks, I get thoughts and things that pop up into my mind. And when I was on this jog walk, I'll call it, I had the thought, like I was thinking about the presentation. I was like, well, it went really well, and I think you'll find out if you watch it. And I encourage you to watch it all the way through. But what the thought was, like, this is why people are going out of business. It doesn't mean that you will go out of business. It means that if you do go out of business, it will likely be because of one of these reasons that I stated in this video. And there's only like 2 or 3 that you really, really need to make sure that you capture. Because I have a lot of friends who've been in business for a long time in the investing world, and they're no longer in business. They're getting jobs. So watch this video. Incredibly, incredibly important that you get some of these fundamentals, and the things that I share in here can have a huge impact on the longevity and success and sustainability of your business. All right, so there we go. So learn to thrive when the market dives. So the market's diving a little bit right now. Would you say? Are you doing some deals right now? No, you're kicking some tires?
Yeah.
Looking to get started, figuring out, hey, do I want to do this or not?
No, I want to do it.
You've made up your mind, you're like, I'm ready to go. Yeah. Well, you timed it really good, to be honest. Like, down market is a really good time. It's, quite be honest, like, it's the best time. We've been waiting for this for quite a while. So here's what I'm going to cover today. Why affordable housing performs in any market, proven strategies for investors and agents, how to build wealth without betting on appreciation, because a lot of people are betting on appreciation right now. They're doing these creative financing deals, strategy deals with no equity or little equity. I'm like, well, the market's going to go up. Next year, it's going to be worth $20, $50, $100,000 more. They're basing that off of what's happened in the past, but a lot of people don't realize, like, real estate does go down. Like, let's look at history and it goes down, but people are basing off, oh, the last 10 years, it's just gone up, so real estate's always going to go up. Not true. So there's going to be a lot of people like with a rude awakening. I put on a couple bonus slides in here, time permitting. I think we're going to be good, so we'll get some bonus training. So a little bit about myself. I've been doing this for 18 years, full-time now for over 16 years. Started out with nothing, broke, used a credit card to buy my first property, actually. Don't recommend people doing that, but if I were back in that situation, I'd do it all over again. All right, so do what you need to do. But I was really committed to making this thing work. And so that's what I did. I basically, when I said I use credit, like, I bet on me rather than somebody else, right? And used that to buy my first rental as a down payment. Went on to buy 10 more rentals that first year. I was still working a job. Bought 10 more the next year. Quit my job, and the rest, they say, is history. But I've done 500 something deals since. Borrowed and repaid over $50 million to lenders. And we've got about 17 million active in the market right now in terms of capital, and kept 100% track record, loan performance. And that's where I do toot my own horn a little bit on that, because I'm proud of that, we've always kept a perfect track record with our lenders. But the more important thing, like me as a teacher or as a coach, the more important thing is, like, I know when you do what I teach the right way, it works. And if you don't do it the right way, it doesn't work. But I know, like, it doesn't mean it works perfectly. It doesn't mean like there's not bad deals, because there certainly are. But I know more people than I would like to care to know that have struggled in this market and have not kept their businesses afloat. And so that makes me sad. But I know that maybe if they had the right fundamentals, they would still be in business today, or they would be able to perform on their loans, and they weren't able to. And I've also written a few books and done some speaking. So let's define affordable housing real quick. So this, as it says, refers to homes that working class families, individuals, and seniors can realistically afford, typically priced or rented below the median market level, right? So we've got low-end housing, median, high. Our business model is built at this median price housing level and below. For investing terms, it means that entry-level housing, smaller single-family homes. We've moved into buying manufactured homes, AKA mobile homes, trailer homes, some people call them, mobile home parks. We bought RV parks, rentals. And I say modest rentals because you can't have luxurious rentals because cost of taxes, cost of insurance has gone so, it's increased so much that they don't make sense. What I mean, they don't make sense. They don't cash flow. And whenever you plug in you look at your return on investment on these nicer homes, it just doesn't make sense. I am coaching someone right now, and they went out and they bought a very nice home for a rental, and I'm like, that's a beautiful home, but it's 3,500 square feet. This thing's not going to cash flow. When they're like, well, we put down $200,000 of cash, I'm like, look at your cash on cash return is not going to be good versus to doing kind of the model that we do, where some of our returns are through the roof, like renting out tiny homes and cabins and things like that. Our ROIs, like I said, it's through the roof. So why does affordable housing perform in any market? And it's really important to make sure that as you're planning on building your business, that for me, like I want a business that is sustainable in any market, because what happens a lot of times is people come into real estate and they have a strategy this can be a great strategy. They have a strategy that's working in today's market, and they build their business around that strategy. And then what happens when the market changes? They're out of business, right? They didn't foresee that. So you want to build a business that is sustainable. And that's why I'm all in with affordable housing. And why? Well, because I call it, you're insulated. Okay. You have insulation. Market goes up. Guess what? People are like, I'm losing buyers or renters. That's true, but you're gaining them at the same time. Market goes down. Well, you may be losing some people, but you're gaining them at the same time. So let me show you an illustration. So we've got three price points here, right? Like low end, median, high end. And for a lot of times I focus down here. And that was pretty good to me. At times I've done like a high number of deals here, specifically in this area of town that we're at right now, in oil and gas tanked, and I was hurting like really, really bad. I had all these real high end flips, like I had a lot of them, $500,000, $600,000, $800,000. We're doing new construction over here, and the market stopped, and those properties don't cash flow. So that's when I realized, you know what? I'm not going to play around in this space anymore because I didn't have options. Same thing here. If you're at the low of the low, there's some things like we did pretty well there, but I decided after I'm talking like borderline war zones and stuff like that, like low end, Sunnyside areas, place like way back in the day. I'm like, let's find the sweet spot here. Let's find the sweet spot. And this is where I found it to be. Why? Because like I said, if the market's going up, you're losing some people. They're moving on up, like the Jeffersons, they're moving on up, and that's fine. But at the same time, other people are moving up. They're moving from that low to that median price point. Okay. The market goes down, we're losing some folks, but guess what? We're gaining some folks too, because some people realize they bought some of these high-end houses over here. They can't afford them. They've got to downsize. So what we have done is basically just made a decision, a business decision, for sustainability reasons. This is where our focus is going to be in this area. This is where we're focusing on marketing efforts and looking for deals that are in that spot. Okay. So that's why we love affordable housing and why it can work in any market. So what are strategies for investors and agents? So we're going to talk about investors first. So some proven and practical approaches to be sustainable as an investor, and also create win-win deals for other people. So for investors, what does this look like? Rentals, like I said earlier, more of like modest rentals, medium price housing and below. House flipping, it has slowed down, meaning your days on the market, the buyer pool, things like that. Prices aren't really falling, but they're not going up. That's for sure. They're kind of just like flat in most markets right now, but there's still opportunities to flip if you buy them right. And if you buy them in the right market, some flips move really, really quickly, but you do have to factor that into your offers now. Owner finance notes, I really love those. We're getting into doing some pad split now. What is that? That's like basically shared housing where we're renting rooms. Instead of renting the whole house, we're renting rooms to individuals. Have you done any of this yet? I know you're going to do one. We're going to do one too. Probably going to do 2 and maybe 3. Yes. Yeah. You can do it with less, but yes. Yeah. Depends on who's doing the management, all that kind of stuff. Airbnb, and I put in some cases because a lot of people are doing like high-end Airbnb right now. Mm, destination places, okay, where Airbnb was like on fire for a little bit and people were able to do Airbnb in all these regular type neighborhoods. I don't do this. I don't do that. What I do utilize Airbnb for is, one, you can have destination places, and then we've also started doing. We have a number of Airbnbs actually in our RV parks. Okay, in one RV park, to clarify, we've got one RV park that's very well located on a major highway. There's not a ton of other competition around there, and our Airbnbs are staying booked solid. We're doing a bus tour in 2-3 weeks out there in East Texas. We're going to be talking about some of that. And then scaling up, if you start doing, investing in affordable housing, then at some point in time, you're probably going to want to scale. So for us, we've scaled into parks, RV parks, mobile home parks. So how does that work for agents? So basically, let's look at your options as an agent. If you're working with like a buyer, meaning someone who's looking to buy a home, or someone who is looking to sell their personal home, typically that you're going to work with that customer, that client one time, and that's it. Maybe like what's a 1.2 turn ratio, whatever it is. If years later, maybe you're going to list that home or help them buy another home. It's rare. Maybe it's a 2x customer. Investors only, repeat business. One of the very first agents that I worked with, I bought 30 something properties from this guy in less than 4 years. That was me. He had me as one client, and he did all those transactions. Okay. So if you're an agent, you need to look at maybe focusing all your business on investors, but at least having a portion of your business focused on investors. I've got several agents that I work with very closely for my own deals, and then I just have friendship with them, and I know they've built their business off of working with real estate investors, and it's for this reason. They have clients who multiple transactions. So how do you generate these leads? With marketing. So I would say cast a wider net in your marketing efforts. There's obviously cases to be made to niche your marketing on a specific area, and I'm not telling you not to do that, but I will tell you that you can do traditional marketing, but you can also include a hook or an option to also work with investors. And we do the same with our motivated seller marketing, meaning when we are putting out marketing for home sellers to, hey, we buy houses, we also give them an option. Like, we understand a cash offer may not work best for you. Okay, so we have the options of we provide cash offers, we provide traditional listings that we could help you list and sell your property on the market. Maybe and sometimes we have creative financing options for you as well. So we try to meet that seller where they're at, that figure out what helps them the most. And I think that the more successful, I will say smarter agents to do this, and y'all have probably heard like radio commercials. A lot of agents do that. Hey, I want to list your home, blah, 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 yada, yada, yada. And they say, hey, and if your home doesn't sell in this period of time, we give you a price guarantee to buy your home. Have y'all heard these commercials like this? All the time. What are they doing? This is what they're doing. They're trying a traditional pitch to get that listing, to work with that seller, but they're also saying that, hey, we have a cash offer on the table. So this has already been proven to work. And that's why I think like smart agents are like really acknowledging that what the money that has been left on the table in the past by not talking to investors. And then for real estate agents, at some point in time, actually invest in real estate, because you don't want to be in that situation where you're in the real estate industry and you're working your butt off and you're helping other people build wealth through real estate, but you're not doing it yourself. And I've seen this happen time and time again. And I've been in this business almost 2 decades now. And I know realtors from when I started 2 decades ago, they've not done a single real estate deal. They've helped hundreds of people over this time without really helping themselves. And so,
quick question.
Yep, go ahead.
On that note, you flip that around. Would you say that they would be better for an investor to start as maybe an agent to maybe learn the ropes or have those resources?
So, well, my answer to every real estate question, Travis knows it, but it depends. Okay, it depends. Um, it depends on what that individual investor's goal is, what their vision is. Some investors never need to get a real estate license. For most people that are looking to go into real estate investing, whether it be full-time or part-time, I actually would not recommend their first step being get a real estate license. I would actually recommend that they become a wholesaler and start wholesaling deals, because that's a much more valuable skill set to have, which is to learn the marketing side of the business. And if you can learn the marketing side of the business and begin generating quality motivated seller leads, now you have options. Hey, I can buy this myself, or I can just wholesale it some money, or I could refer it to an agent to list it, whatever it may be. So I would start there more so than a real estate license. Yeah, yeah, and I think that's yeah, I think that's a smarter thing to do. And
yeah, I started
he's
as
an
a
agent,
wholesaler,
and then got his license.
I got my license, and legitimized me a little bit, but I still kept wholesaling.
Yeah.
Now I'm an agent, which makes you
Yeah.
more trustworthy.
Gotcha.
Yeah, so that's what I would focus on. For some people just go straight into investing. You don't need to do either. I did not start as a wholesaler. In hindsight, would I've done that? No, but it does make sense for most people. The reason I didn't start as a wholesaler is I was in a different market. Okay, I was in a market where, well, one, I was at a time in my life where I had, wife and children, and we were like starting to bring up a family, and I was working a lot, right? So if I was going to, and to be quite honest, I didn't really know anything about wholesaling. I read a few books about investing and doing deals, so I just went right there. And deals were real easy to find back then. This market is much more difficult. So that ability to market and get good deals right now is a much more valuable skill set. So what I did was, one, learn how to get people to bring me good deals, and then figure out the financing piece. So that was a more critical skill set to have back then, was how to get financing. That's become a little bit easier. It's tightened up a little bit, but those are my thoughts on that. But real important is to create wealth. You create wealth through real estate, right? We know that is the number one way to create wealth in the world today. But that being said, I heard a very wise man say this one time, and I think I shared this with you in that text. And he said, investing in real estate, you can create a lot of wealth, but having a real estate investment business is not always the greatest thing in the world. But investing in real estate is. Okay. So having a business that's exclusively only on investing, at times can be very, very difficult when markets crash and tank and things like that. So what I've learned is to build a business while also investing in real estate. Okay. And you can do both of these things at scale, whatever that scale looks like to you. But what I've seen with some people that have gone, a lot of times they are not running a sustainable business model either, but they're 100% running a real estate investment business, and they go out of business. So what I like to do is build a business or build businesses that meet or exceed my income needs while investing in real estate. So I'm not dependent upon this income. And I'll explain this a little bit further in another slide here in just a minute. So one of the things I said I'd cover, how to build wealth without betting on appreciation. So let's talk about that, because a lot of people are betting on appreciation, and you're gambling, right? That's betting, it's gambling. So you want to invest in real estate vehicles that provide multiple exit strategies and multiple income stream options, right? So you're looking at a deal, you want it to have those two things. Multiple exit strategies, you can sell it different ways, or you could generate income from it, an income stream with different options. So we want to have options. And these options help to generate long-term cash flow and thus generational wealth by focusing on resilient assets and structures that work, right? Even in downturns, we talked about this: rentals, nodes, flipping, Airbnb on occasion, pad split, perhaps parks. And so that's essentially how we're going to build wealth without betting on appreciation. Is we're looking for cash flow, and we're playing the long game. This is not like a get rich quick thing. Wealth is created, from what I've seen and experienced, over a long period of time, typically a decade, multiple decades of making good, sound decisions over and over and over again, avoiding the foolish ones. So we're looking for cash flow and looking at that long-term play. Because when we do that, there's multiple ways that real estate helps us to create wealth and have a sustainable model, right? We're generating income from that deal, from that asset. We are paying down principal each and every month. We should be capturing equity in the beginning. A lot of people, that's why I said, I've seen some terrible deals where they are saying, oh, there's no equity, but I've got a sub-2 deal with 3% interest. I'm like, but there's no equity in the deal. This is one of our criteria, is to have that equity and then grow it, of course. Tax benefits and then appreciation, because if you hold on for the long term, it could go down. That maybe happen a little bit in today's market, depending on where you're at. But over time, it will appreciate if you're in it for the long haul. And that's how we create wealth. What is wealth? Wealth is better and more options, right? Not just in financially, spiritually, physically, in relationships. Like, we want better and more options. And so that's what, when you invest wisely, you have. Like, you begin to create wealth because you're focusing on deals with better and more options. Those types of deals we talked about. Options, what do they give you? Security, flexibility, freedom, and they create wealth. So this is part of the bonus string I mentioned. So I like to talk about, there's essentially these 3 money buckets. And so we'll take a real estate focus here. And a lot of people coming in, and I did do this. So I'm not gonna lie, like, I started that way, but like I said, it was a different market and I took what was there. But a lot of people come in and they may be in a situation where I was, where they don't have money, they have little to no money, and they maybe even be in like debt, and they have maybe not a whole lot of time, and like, I want to build a rental portfolio. Well, that's probably not a wise decision in today's market, just like, to be honest with you. Probably not a great decision. And why is that? So what I encourage people to do is focus on the active bucket first. I know these aren't buckets, but my assistant put this together kind of quickly. But you want to make sure that this active income thing is taken care of first. Okay. So what do I mean by that? It's like, what are your bills? Okay. What are your monthly requirements that you have to take care for? You've got a family, you've got a home, you've got food, you've got, housing, insurance, whatever those needs are. Figure out what your active needs are first. Okay, find a way to meet or exceed those expenses. Okay, for some of you, this may be through a job. If you love your job and it's helping you pay those bills, and maybe even more than that, great, keep it if you love it. If you don't love your job, which is most people, then look for something else. Don't just quit it. Don't just quit it and say, I hate my job, I'm going to go do real estate full time, and quit that job. Because all those people have to run back. Like, you want to build a runway where you can launch successfully and not crash that plane. Huh? Yep. Quit your job and just run into it. That's may not be wise. Okay. So Bill, I strongly dislike my job. Okay. I don't like to use the word hate too much. So I strongly dislike my job, but I still stayed there for, I'm going to tell you how many hours I stayed there, for 27 months. Okay. After I was like, started real estate, 2 years and 3 months, I stayed at that job, and I did this full time. I did this part time, which led to, I did about 25 deals during that period of time. And then I said, all right, I'm going to go full time now, because I had a good runway and I've, been able to not go back to having a job. But so with this active income bucket, some of you, if you don't like your job, build a business. I want to make sure someone's listening to me. Build a business that is synergistic and helps you grow your investing business. So this is like one of the keys to really create wealth. Build a business, invest in real estate. Build a business, invest in real estate. What's even more ideal is you build a business that helps you grow and helps you invest in real estate. with the people that you're around, deals that are coming to you, being in the right groups. But one way or another, it doesn't matter. You need to make sure that this active income bucket meets or exceeds your needs, income wise, cash flow wise, and I would say purpose wise, if you're fulfilling a purpose, like you feel good about yourself and what you're doing. Now that you're building up this income and these assets, now that runs over to the passive side of things. I'm probably going to change this in the future to recurring, because the word passive is misleading, just to be quite honest. Most times in real estate, it's misleading. It's passive until it's not passive. In some properties, some rentals they go through periods of time where they're not passive at all. I have land deals. You think a land deal is a passive deal? Sometimes it is, but no, it's not. Like, go to your mailbox and you get, I just got served papers that eminent domain, and the county's coming through and digging an 18-acre ditch right through the main entrance of our property. Guess what? That is not a passive investment anymore. Okay, it's been very active. So we got to look at this, but you begin to put assets though that can be passive and generate recurring income. That's what we really want to get to, whether those be rentals, owner finance notes, mobile home parks. I've sold land with owner financing, owner finance notes, all these things. And now we start just pouring in our, not just money, but our time to build up as many of those assets that we can, that make sense, that meet our investment criteria that I laid out earlier. And then as we begin to build up these income streams, that is what begins to create wealth. So that overflows to create wealth. Now we have income that we can invest in more real estate, coins, stocks, whatever your thing is. We can begin to create wealth that way. Life insurance policies, there's all these ways that we can utilize the money that now our real estate is creating to create wealth, doing 1031 exchanges. And we're building up equity and all these types of things. But it all starts with that active income bucket, making sure that is plentiful. And then ideally it's something that you love doing, that you enjoy doing, and can be synergistic with growing your business. So covered a lot of slides. I know some of y'all missed them, but we are recording this if you want to see it. But this training basically comes down to invest in rentals, flipping, owner finance notes, whatever your strategy is. There's 5 fundamentals. Okay, there's 5 fundamentals that you see here. So it all begins with your focus. I say, if you don't really have a clear vision of what it is that you want to do and that you want to create in real estate or in business, I would say don't even start. Like, that is step 1. And it doesn't mean that you have to have, a lot of people get hung up, like they think they have to have this goal or this vision or this focus to carry them through for the next 10, 20, 30, 40, 50 years till their death. No, that's not what I'm saying. It's like, from where you're at right now and what do you want? Like, what is that vision? What is that focus? I had one crystal clear focus when I got into real estate, and it was not about making money. It was not about making money. That was not the clear focus. What was my focus? Who wants to guess? Nope, was not my kids. I wanted to quit my job. That was what I wanted to do. I wanted to quit my job, period. And if I could quit my job, I was going to be feel like the wealthiest man alive.
Just out of curiosity, what did you do that was so terrible?
Well, before that job, I was 7 years in law enforcement. That was not it, though. There was reasons I chose to get out of that. And so I went into a quote unquote corporate job. I worked for a company called Ecolab, and I'm a pretty quiet, reserved kind of guy. And I had a sales job, but it was sales and service. So what I sold was chemical dispensers for dishwashing machines, laundry machines, mop, flooring cleaner, glass cleaner, all this kind of stuff. So whenever we sold an account or serviced accounts, so mainly I was servicing accounts every day, and then I had to go sell accounts also. I also had to throw on, it was a lab jacket to look professional, but I was wearing long sleeve shirt, often a tie, lab jacket, 100-degree plus humid weather in Houston, Texas, servicing the medical center. And I would going dripping down, pouring sweat, going to another place. I'd literally be on the ground, laying in water, messing around with 220 volt electricity, slop falling on my face from dishwashing machine, and then I would have to go sell. I didn't want to sell. I hated sales. But that's what I did, and I hated it from day one. And my wife's like, oh, how was your first day? She's happy I'm not in law enforcement anymore. I'm like, I hate it. Like, it's terrible. But I'll do it. And I kind of just bumped around for 2 years and just like, well, maybe this is my destiny to work at this job, and maybe I'll try to get promoted. And it was a very sad existence because I thought life was over. And my mind went into some really dark places. I'm not gonna lie. So then I went. This is why I get really passionate a lot of times when I talk about real estate, because it's not about money. It's because it helped me break free from that place. And then after I was like, okay, this works. I was able to quit my job. Obviously, I got into real estate to also make money, but it was for that. It was for the freedom that I wanted. So that has always been my focus is the freedom, being able to pursue and do what I want to do. So start with a clear focus. The most important thing is something that is really like resonates with you, and something that's going to compel you to take a lot of action and deal with the problems that arise, because there's problems that arise in this. Like, if you don't want to deal with problems, like, don't start a business. Like, there's stuff like all the time I'm dealing with, and sometimes you just got to chuckle. It's like, okay, this is what we're dealing with today. We got hacked this week. I was at EXP calling. We got hacked: bank accounts, QuickBooks, property management system. Huh? You did at a property? Yeah, burglarized. Like, we've death threats, you name it, like all kinds of stuff. So it ain't for everybody. But I still read the statistic. Most 70-80% of people in the world create wealth through real estate. So I'm like, I'm just going to go ahead and do it. So after we get that focus, we need to know how to find deals. Okay, we need to know how to consistently find good deals through our marketing efforts or the marketing efforts of others. And we need to know how to analyze those deals as well, in terms of what are they going to be worth, what should I offer, what are my repairs. That's a fundamental. Next part is fund. How are we going to fund those deals? So in the beginning, I funded everything with hard money. I moved on. That was everything in year one. Year two, I still use hard money, but I utilized some partnerships also. I had to bring some partners in, so I couldn't tap into my credit cards or credit anymore like I did year one. And then I learned about private money. So since then, we've raised, I don't know how many tens of millions of dollars in private money. So that's been our strategy ever since. And that's what I focus on teaching people that I coach on, how to raise money and raise it the right way. And then after you fund a deal, what do you got to do? You got to fix it. So you build your team of contractors, build that side of things up. By the way, Adam Metzler is going to be speaking here next Tuesday, Aldridge. Next Tuesday from Cost Plus Construction. He'll be talking about that side of things, on how to manage your rehabs the right way. And then lastly, we use the word flip because it's an F, so we got the F theme going. But what I really mean this in my training with these 5 fundamentals is focus, find, fund, fix, flip. You're flipping that asset, right? You're flipping that asset from where it was previously when you bought it, distressed, dilapidated, vacant, all that kind of. You're flipping it to what is helping you define your freedom. So we call it the freedom flex, right? So you're flipping that asset to it could be you're flipping it to a rental, to an Airbnb, to a pad split, what owner finance note. But you are doing these 5 fundamentals to execute your freedom. That's the most important thing. Sometimes it's just flipping it, make a bunch of cash. I get that. Like, that's one of our strategies, but we're keeping that goal of what is the end in mind. All right. So I say in a lot of my coaching events, like in our calls, right? Like, information without implementation is worthless. So action steps I give y'all today: take action on some of the things that you learned today. And if you're not a member of our community already, if you want to scan that code, you can get free access to our Wealth Passage community. A lot of this training is in there. You want to take a shot of that? And you're able to get that there. Did it pop up? Okay, great. We do have a shameless plug. We do have a bus tour coming up in 3 weeks. I think it's 3 weeks from today. So we have a affordable housing freedom tour. So we're going to tour East Texas and go visit a lot of my mobile home parks and RV parks in that area. we've got 4 up there, so we're going to tour those. And the cool thing about them and what we're going to be doing there is I have this one RV park, for example, and in this RV park we have single family rental, like regular 3-bedroom, 2-bath brick, home. We have rentals in this community. We have tiny homes. We have cabins. We have RVs. We have owner finance notes. We have, and some people are just renting pad space. Some people are renting the home. Some people are there from Airbnb. Some are short-term rentals. Some are long-term rentals. We've got storage units. We have a laundry facility. So you can see that whole ecosystem in one park. And so my goal is to help people expand their mind of who may be doing one-off deals. Maybe you need to scale up also and do some of these deals like this. So that's coming up. If you want information, if you scan the QR code, we'll make sure you get that. And that's it. There's that code again if you need it. But Aldridge, I think we have a little bit of time. I got a closing at 11:30, but if you guys have any questions, I can answer questions. All right. Thank you.